Hello, 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 hello. What's going on, everybody? Happy Easter. Hope everything's doing well. In this video, we're going to go ahead and show you a couple of graphs, a couple of things that I find to be quite interesting given uh, everything we've been talking about. I feel like it's going to be one of those videos that you're going to learn a lot from, right? So, first things first, I want to go ahead and just talk to you guys a little bit about something, right? So, for folks that know or don't know, I'm in Phoenix, right? Uh, I came yesterday. I had a few things I needed to get done on the medical side, but today I was able to celebrate some Easter. Had a nice brunch, but I felt like it was time to kind of go back, kind of visit my childhood, a place where I grew up, right? So a lot of you know kind of where I'm at. You guys, have a feeling of what the lifestyle I'm living now, and uh, the money that generating and all these things, and it's great, right? But I wanted to kind of bring you a little a little more deeper into where I grew up, a place that I remember when I was a kid. So you see this right here? This is where I grew up. It was like a trailer home. This is it right here. Interestingly, it's for sale. Apparently, that's a little hitch right here. This was this was home. This was home. This is where I grew up when I was a little kid. Poor area, trailer home. Interestingly enough, a lot of people that purchase lifetime access, they show me where they're from. They send me a picture, but like, this is where I live, Al. I'm trusting in your platform to help change my situation. Sometimes with all the chefs, all the covered calls, cash secured puts, all the Palantirs, the SoFi gains, all of that, all that money is made. Um, we forget where we came from. Yeah, Hitch has to stay on there, otherwise it gets taxed heavier. Yeah, yep. This is it. And the sad part is, I had to hide because this is a neighborhood for elderly people because it's a little cheaper to live in. So many people had to fit in this room. There's another room over here too. Obviously, it wasn't. It was made artificially. It wasn't. It's not. It's. It's not supposed to be there. But it's a little room that was built. This is where I grew up. This was home, right? A trailer home, deep in a very poor area of Arizona. This was my foundation, right? This was the area that I was in. Another next to another trailer home on the left, another trailer home on the right. So whenever you see kind of, where I am now and all the things that are going to come in the future, this was my life. And I'll tell you something. I loved every bit of it. It was beautiful, right? You don't know you don't know what's out there. You don't know what's out there in the world, right? The point of me showing you guys this, I hope inspires you, because a lot of you guys, you see this, right? You see this beachfront view, Miami, right? You see this presidential suite, Cancun, beautiful view, highest room in the hotel, own butler, living like you're on top, looking down at the world, drinking cappuccino, looking at the beautiful sea, hearing the sounds of the ocean, working, bringing the desk outside, bringing breakfast to you, having a double-edged patio from a presidential suite overlooking all of Cancun, right? And it all started from here. It started right there. Even worse too. It got worse after this. This was the good times. There were good times, right? It started all here. The point of me telling you this is there's a lot of people that watch this channel that come from nothing. That come from a situation like this, or that grew up in a situation like this. And I'm telling you that I found a way out. I found the way out of poverty. And I want each and every one of you that watch this channel, I want you to get to this level. I know it's cliche to say, but if I could do it, you can too. I've developed a blueprint to show you how I was able to literally come from the trailer homes, right? Where people normally, I guess they call, they call folks that come from this area white trash, right? Even though I'm not white, right? I guess trash, right? The point is, you can come from trash and still be able to live like a king or queen for the people that are watching. And you're right, B Rob. No matter what we accomplish, we must never forget where it all began. 100%. Because this here means nothing. This that you see here means nothing if I was born into this. This means nothing. But this right here, little place, little house, where you can't really be outside too long because you're in a 65 up neighborhood, right? Because the rent's cheap. You have to hide, right? For God's sakes, there's a freaking hitch here, right? This is where it all began. So, anywho, for the folks that are watching, that money's tight, rent is high, there's a way out. And I found it. And I'm going to show you. Okay. All right, guys. So let's go ahead. Let's talk about a couple things. Let's go ahead and So in this video, what we're going to be doing right now is I'm going to show you a few things. Okay. I'm going to show you, and I want this to be a little bit interactive so folks that can, can talk and whatnot. And if you can contribute, uh, we're going to first go and look at a company. Okay. We're going to open up the financial data metrics here. Okay. And we're going to look up a specific company. Okay. We're going to do a couple things here. Okay. I'm going to see if I can zoom in, and we'll zoom down low here. Maybe might zoom in a little bit more, bring it a little low. Maybe a little bit zoom in more. Maybe. Okay, fine. That's good. This is the best we can do right now. Let me just pull up this comment. My parents took my sister and I to a nursing home on holidays when we weren't traveling. It taught us compassion and humility and caring for others at a young age. Absolutely. Going back to this area, I see all the elderly people, all the ones that I used to know, they've all passed on. But I see a new cohort of people over that are seniors. This is an area where politicians don't tend to visit. They're usually in Scottsdale, right? Or in Ahwatukee, near the golf courses. The area that you saw politicians don't tend to visit, right? But even with all that, in the air, with no resources, near a food desert, you see people have American flags they put on their little trailer homes. Yeah, it's really inspirational. So what I wanted to do is I wanted to talk to you about this, and I wanted to have this to be a little bit interactive. Okay. So what do you notice here? What do you notice? You look at this company, okay, and you have all this information. What do you see? Take a moment, look at it, and tell me what you see. I'm going to go ahead and read this comment, but I won't put it up so people can see the page here. After starting at McDonald's, I worked in a nursing home as a CNA on night shift. Tough work, and you find out death is, yeah, 100%. Yeah. Well, there it is, Mr. Patel. Free cash flow positive. What else do you see? What else there's another thing too. So you're right here. Free cash flow positive. Let's zoom in. Let's escape and let's zoom in. Right there. You're right. Free cash flow positive right there. For the first time, because this one was negative, then it became positive. What's this orange line here? Ah, net income. All right. So for the first time in 2023, this company got pretty cool. Usually it's one time free cash flow, the next year net income, or 2 years out net income. But for this company, okay, good. Operation and cash flow positive. Yeah. Good job, because you're able to, go let's see here, and you saw that it turned positive. In fact, let me go ahead and grab operating cash flow. Look at that. All of them turned positive. They were negative here, and they all turned positive here. Isn't that a thing? And that all from 2022 to 2023, they turned positive in 2023, right? Or you could just go ahead and look at the AI summary here, and it'll tell you, right? It'll tell you. Operating cash flow 2023 turned positive. Free cash flow 2023 turned positive. Net income 2023 turned positive. So what company is this? What company is this? What is this? Do anyone know what company it is? Not a trick question. It's in the upper left. There's no trick questions here. Wall Street's stupid. They want you to think they're smart, but they're all stupid. They all look at a few numbers. The reason why it's hard to find, the reason why there's not a lot of millionaires and billionaires in the world is because these numbers, they don't give you access to these numbers. They don't want you to know these numbers. And they don't teach you these words that have meaning and equation that we outlined for you. Wall Street's stupid. They just hang on to this data. That's what makes them look smart. They just got access, right? Exactly. This company's Carvana. Okay. So let's analyze this. So in 2023, all three turned positive. What do you think happened to the stock price? What do you think happened? Well, let's open up a tab. CVNA stock. And okay, not loading. Do you guys still see the video? I mean, I have it here. Kind of weird out that it's not loading. Huh, that's weird. Okay, at least I have it. At least I came prepared. There. So let's look at the past 5 years. This is Carvana. What do you see? What happened in 2023? The stock price was $4. In fact, let's go ahead. Let's bring back this graph. Let's see what Carvana was. You know how like every stock has a low, right? Carvana was $3.55. If you don't believe me, let me just take a little screenshot here, because sometimes it's hard to see these numbers. Let's go ahead and put this. Oh, no, you can't. But let me see. Let's put the screenshot here. You see that? $3.55. So it went down as low as $3 in 2022. But then as the company started becoming free cash flow positive, it went all the way up to 14. But then it fell down because they still needed to prove themselves. So when, they still needed to, because it went all the way up because they got excited. They got 1 quarter of free cash flow. And then it just fell back down to 6. And then once they proved that all three in 2023 went positive, net income, operating cash flow, and free cash flow, what happened to the stock price? What happened to the stock price, ladies and gentlemen? It ballooned. It ballooned over 6,300%. In fact, let's go find the bottom here. It ballooned 6,900%. 69 bagger. 69x your money. $1 invested would have turned into $69. $1 million invested would turn into, let me see, $69 million. This is the power of fundamental analysis. But the problem is how do you calculate the stock price? Well, all you have to do is take the free cash flow, which is 716, and apply it with the growth rate, which whatever that was during the time. And then you would have ended up getting your what you call it, price target. For all intensive purposes, we could go ahead and just do it. CVNA. Free cash flow is around 750. So we can put 750. We can add this up. And the price when it was trading back in the day was $4. You could have, approximated it. Look at that. What does that say? $238. What did it go up to? 285. First one was here 260, but you're able to predict that all the way down here. All the way down here. That's the power of intrinsic value. Okay? All right. So let's go back now. Okay? So that's one example. Okay? We just showed you Carvana. The thing dropped in 2023, and then it exploded after. Let's go ahead and do another one. Let's do Palantir. Okay. Tell me what you notice, everybody. Tell me what you notice. Let's go ahead and do operating cash flow. Let's do it all. Tell me what you notice. Let's zoom in a little bit. What do you guys notice? In 2021, they turned operating and free cash flow positive, but net income was still negative. 2022, free cash flow and operating was positive, net income is negative. 2023, all three turned positive. What happened to the stock price in 2023? Let's see. Here's 2023. All three turned positive. It went as high as 1,600%, 16x. Now, 12x. You see that? Let's try another example. Let's do Tesla. Let's do operating cash flow. So let's read this. 2018, operating cash flow for the first time turned positive for Tesla. 2019, both free cash flow and operating cash flow turned positive. In 2020, all three turned positive. Or you can just read it here. AI summary. Our platform, Al Stock Trades Terminal, tells it to you. Operating cash flow 2018 turned positive. Free cash flow 2019 turned positive. And net income 2020 turned positive. Therefore, in 2020, all three were positive. What happened in Tesla in 2020? So in 2020, all three were positive. So let's see. Tesla was $12, $13 there. And then what happened after 2020? It exploded 2,300%. In fact, the most recent high here was 2,500%, 25x. Or now, 1,300%, 13x. Let's try another. Let's try another. End phase. Operating cash flow turned positive for the first time in 2018. Free cash flow turned positive in 2018. 2019, all three turned positive. Let's look up end phase now. (2018) one turned positive. 2019, the other turned positive. Remember, and by the way, in 2017, this thing was let me show you. This thing was 17 pennies. 72 pennies. Sorry, 72 pennies. We'll talk about that later. Once they all turned positive, what happened? It exploded. The stock went from 70 pennies all the way up to $336. Obviously, now it's not its market, and I need to figure out what happened, but ultimately, you see the pattern. All right, B Rob says, let's do Oscar. Let's do Oscar. Oscar. 2022, Oscar turned operating cash flow and free cash flow. But then all of a sudden, 2023, they all turned negative. But then in 2024, it all turned positive. But this one is insy bitsy. If next year they're able to raise this net income, then the stock is going to explode even more. Let's see. Looks like the turning point was from 2023 to 2024. Let's look up Oscar. No. I think it's a good example. 2023 to 2024. Well, here's 2023. It was $2. In 2023, it was $2 because it was all negative. Then they all turned positive. What happened? 400%. Or highest? 937%. Almost a 10-bagger. Let's do another example. Let's do AMD. How many examples do we have to do until the point is proven? How many examples? AMD operating cash flow turned positive in 2016. This little one right here. Right? 2018, net income turned positive. But then in 2019, all three turned positive. And then it basically exploded afterwards. I went to the races. Let's look up AMD now, because we just talked about the financials. Let's see. There's AMD. Used to be $2. What happened after it all turned positive in 2019? Well, here it is. It went from $2. It 10-bagged in 2019. It went up 10x. And it went to $32. And afterwards, it went to the races. And it went up 7,000%. 70x. You put in $1, you'll make $70. You'll put in $100,000, you make $7 million. You put in $1 million, you just made 70 million, because the stock price went as high as $207. All right, you've been waiting for it. Let's look at Clover Health. Let's look at operating cash flow. Negative, all three 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 negative. 2024. Operating cash flow and free cash flow turned positive in 2024. Net income is still negative. I think in 2025, net income will still be negative. I think 2026 or 2027 may be their year. But it's okay. 2 out of the 3 turned positive. So all 3 were negative, and 2 out of the 3 were positive. So let's see what happened in 2023 and 2024. You guys know. I don't have to tell you. But for the people that are new, 2023, it was 70 cents. Then here was a transition when people started realizing it went positive. It's up 400 to the peak, 653%. Now, 462%. What do you think is going to happen when all 3 turn positive? I think it's going to be higher than what you have expected, because Clover was trading at bankruptcy level prices at its book value at 60 pennies, which you see here. 64 pennies. Actually, it was, I think, 62, but we'll call it 64. What is book value? It's fine. Let me show you the data. Here's book value. Let me exit so I can zoom in. 59 cents. And book value is finally going up again. But it was trading near book value. What is book value? That's fine. Let me read it to you. Book value per share represents the accounting value of shareholders' equity for each share. It's a rough indicator of what each share might be worth if assets were liquidated, aka if assets went under bankruptcy. Ladies and gentlemen, this is not rocket science. Repetition is the mother of learning. I've shown you countless examples. Tesla, Palantir, AMD, Enphase, Carvana. And now you already have a 4 to 6 bagger from the transition point from negative to positive. And only 2 out of the 3 are positive. What do you think will happen when all 3 turn positive? How high do you think it'll go? Well, we have an answer. It's called intrinsic value. We got a comment here. Al, my phone's about to die because I'm doing things around the farm, but can you tell me how the heck FRGT went to 1.8 mil? FRGT, I don't know what's that? FRGT, what is that? Well, FRGT in 2017 looks like it had its heyday. In 2017, it looked good, and then all of a sudden, afterwards, it went really negative. So I don't know. This company looks not good, but we'll see. FRGT. So there it is. It has it. The reason why it's a little higher is because they did a reverse stock split. But you see how it's all negative? So yeah, I wouldn't touch this with a 6-foot pole. All right, SoFi. You said SoFi is another good example. Oh, what about Robinhood? Let's look at Robinhood. Let's do it. All right, let's look at Robinhood. Robinhood 2022. Well, first off, 2021, it was very negative. I don't think they were public in 2020. 2022, all 3 were negative. 2023, 2 out of the 3 were positive. And then in 2024, the net income turned positive. So it's kind of hanky-panky. But 2023 was a deciding factor that allowed them to turn positive. But this income, 1.4 billion, that's a big positive number. So I would say the turning point was from 2022 to 2023. So 2023 and up, I expect the price to go up, which is why we made a video about Robinhood and I assigned a price target. It's in my past, and you can see we were very successful. 2023, it was $8. And what happened? It shot up to 700%. 7, right? And then now 400% increase. Again, 1 was positive, 2 was negative. Imagine when all 3 turned positive. You said SoFi. Let's look at SoFi. SoFi, negative, 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 negative. And then now, for the first time, net income turned positive. So there was a transition point between 2023 to 2024. But even though they still have some work to do, but even look how negative they were here. Probably some acquisitions that we talked about, but overall, it's a bit difficult. You got to look at assets when it comes to banks. There's a different way of evaluating them, but it looks like 2023 to 2024 turning point. Here's 2023. Look at now. 286%. Now at the bottom, now it's recovering. 136. It's all in the fundamentals. The fundamentals don't lie. I hope this example helps you. Problem is, do Intel? Oh shoot. Now All right. All right. I want to see Intel. Let's do Intel. Intel. All three were positive in 2020. All three were positive in 2021, but they started going down. Free cash flow started falling. In 2022, free cash flow turned negative. In 2023, net income became lower. In 2024, both free cash flow and net income dropped to a level unseen in the history of Intel. Where was the turning point for Intel? The turning point was 2020 going to 2021. Their free cash flow dropped precipitously, and their operating cash flow dropped as well. A warning sign. 2020, so I bet you now from 2020 to 2021 and onwards, the stock price probably dropped. Let's go ahead and look at Intel. Here's 2021. And as the stock price and the fundamentals dropped, it went all the way to 68, down $49, which is 72%. Now it's $18.93. The fundamentals don't lie. The problem is, ladies and gentlemen, access. Access is always the problem. Wall Street knows this information is easy. The problem is no one has access. Well, I have resources, right? And I'm sharing these resources with all of you. And these people on Wall Street, they can't touch me. Because again, for the people on the stock terminal, you guys know my resources. Now, is this platform, to get this data, is it expensive? Absolutely. It certainly is expensive. But the point is, it's a GPS. You can't fly a plane without getting a license. You can't drive a car without a license. And I'm telling you right now, for the folks and retail investors that go into Wall Street without data like this, they'll be donating their money to the rich. And it's a cycle. I got two other insurance companies, Root and Lemonade, and I believe they're also on track. Let's look up Root. I'm familiar with this company. Look at Root. $2024, for the first time ever, it turned net income positive. One out of the two. So look what happened. Let's see what happened to Root by just having one metric turn positive. As soon as it turned positive, it used to be $7. In fact, before it was like $3. And now it went up 1,800%, 1,500%. The question is it used to be $3. How could we have figured it out in 2023? What could have we done? Well, very simple. Operating cash flow went from negative 210 million to negative 33. Free cash flow went from negative 220 to negative 43. It improved. Sometimes our eyes can't see that. That's why we have our enhanced AI analysis. You press this button and you go to 2023 and you look at what's the accomplishments of 2023. You see that revenue improved by 46%. Operating income improved by 61%. Operating margins improved by 73%. Net income, unfortunately, did a sign flip. Earnings per share did a sign flip because it used to be positive. Then it went back to being negative. But free cash flow in OCF went higher up. What else? Operating cash flow improved by 84%. Free cash flow improved by 80% with a Z-score of 1.43, statistically significant. Now look at 2024. Revenue's up 158% in the norm. Operating cash flow 177.49, sign flip. Operating margin, sign flip to the positive side. Net income, sign flip. Earnings per share, sign flip. Look at the quarterly. How does it know? Because look at the quarterly. Free cash flow started being positive. Look at the positivity of the free cash flow. Let me show you. You see how they're positive on the free cash flow? But if you look at the quarterly and actually look at it, it's positive. And then our enhanced AI analysis figured it out. Positive, 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 positive. So one thing I have to look at is the annual side. Let me just go ahead and report that so I can put it on my to-do list. And look what happened. It shot up. Now let me show you something else. What I'm about to show you right now is something incredibly powerful. Nowhere in Wall Street do retail investors have access to this information. What you are about to see right now is only accessible to individuals that are on Wall Street. I'm about to show you something that's mind-blowing. In comparison, you might see a lot of retail investors reference something called Fintel. I'm going to give you an example. For the purposes of this discussion, this is an account that is registered with Fintel, including all access, meaning that nothing is hidden. This is a full access account. If you look at institutional ownership holdings and click on this, it only gives you information that is 5 years in the past, 2020. Problem is, this graph looks like crap. This, you cannot tell anything. All you can see is just went up. Institutional ownership here and bars went up, and that's it. This is a terrible way of looking at data. I'm about to show you something that is the most advanced on Wall Street that is available now to retail investors. Again, only institutions have access to this type of level of information. Let me give you an example. Here is Apple. We're going to click on the institutional ownership button. Again, 4 years, not a lot of information, but you can see a clear way of looking at it from stage analysis. For the astute person who's watching, there's an extra button now called 25 years. We're going to click on this button and you're going to see the magic of our Al Stock Trades platform. Now, you can look at institutional holdings, ownership, and everything in between for the past 25 years, going back to the year 2000, before the dot-com bubble crash. We're going to scroll down to look at one thing I would like to point out: ownership percent. You can see back in 2000, about 14% ownership that ultimately dropped, literally nearing, not all, but 0.4%, literally close to 0% of institutions held Apple because of the dot-com. And then it shot up. But then the great financial crisis happened. And in Q1 of 2008, approximately 21.7% of institutions were holding Apple. Now, let me ask you something. What was the stock price of Apple back in 2008 in the great financial crisis? When real estate agents went to people of color, people that were historically marginalized, and sold them mortgages that they knew they couldn't pay off, in which they packaged these mortgages into mortgage-backed securities and repackaged them into criterions that they sold back to unfortunate investors, that caused one of the most deadliest recessions that would have ended up in a depression if the Federal Reserve did not come in and stimulate the economy. In Q1 of 2008, institutional ownership fell to 21.7%, near 20%. If you don't recall, institutional ownership for Clover now is around 20%. So it fell right near the institutional ownership for Clover Health. What do you think the stock price of Apple was in Q1 of 2008? Let's go back. Let's go to Apple. Let's go to Max. Let's go to 2008 and zoom in. Apple was worth $3.36. At the institutional ownership percent of around approximately 20%, Apple was trading at $3.36. Now you tell me, what is Clover Health trading at with the same institutional ownership? $3.60. Ladies and gentlemen, these are patterns. And I've seen these patterns within my 14 years of experience, and I'm trying to share it to you all. I don't have the fancy bells and whistles and the editor to go ahead and edit these videos to make it look good. I don't care about making it look good. I'm trying to make you rich. I'm trying to show you exactly how these billionaires work. This is completely raw, live. There's no script. I am sharing and showing you my discoveries as a scientist with the software that I created to share with you my brain. Let's now go to Enphase since we did the discussion for Apple. Going ahead and loading up Enphase, we hit institutional ownership. We hit 25 years. And we see ownership percent. Enphase in 2014, 2015 had an ownership percent of 66%. Then something happened. They sold hardcore to where institutional ownership fell down to 19% at Q2 of 2017. What was the price of Enphase at Q2 of 2017? It was 72 cents. And then it recovered and broke the red simple moving average trend line to instigate Mr. Weinstein's technical analysis of a stage 1 bull run, which caused the stock price to go over $300 from 72 pennies, where $1 million could have given you approximately $7 million, $70 million in return. Let's go back. Look at the number of new positions growing. Then something happened after 2020 and 2021. It started going down. What's happening to the stock price now? It's going down. What about the investor holdings? Something happened in Q2 of 2024. Sorry, Q4 of 2022, as you can see down here, 2022. It broke from stage 2 and to stage 3, or was it, I think, stage 4. It broke, and now it's in a downtrend, but it peaked in 2022 of Q4. What happened in end phase in 2022? What was the stock price? Ladies and gentlemen, 2022 is right here. The stock price was the highest at $319. But as soon as it broke, you had a pattern. Institutions started dropping. For the first time ever, 2023 gave you hints. And you could predict from an institutional side when they were selling, which then dropped it down. Relief rally, probably bought by retail investors as the rich was selling to the poor. Let's go back and do another example with Palantir Technologies. Looking up institutional ownership, hitting the 25-year mark. Looking at ownership percent. It just shoots up completely. They were always buying Palantir. Always. New positions fell. They were still buying. These are still new positions, but the rate of the new positions fell until now it exploded. Look at that explosion. Look at that explosion of new positions. These are new positions opening. This is for Palantir. Now, I know you guys are all waiting. What's Clover Health? I would like to see Clover's. We'll hit 25 years. Let's look up ownership percent. Clover's ownership percent used to be 42 pennies. I'm sorry, 42%. It dropped under the red line, meaning it became bearish. And then something happened. In Q2 of 2024, moving to Q3 of 2024, it started going up. But something different happened from Q3 of 2024 to Q4 of 2024. It broke out of the 5-period simple moving average, which takes more than a year's worth of institutionally graded, big, rich people data, and it shows you that there was a trend line breakage. What happened from Q2 of 2024 in May to where it is now? Let's look. Q2 May of 2024 was around 60 to 70 pennies. And then it went up to 414%, highest 588%. And ladies and gentlemen, we just started this increase, and institutions want to get back up to their 42% ownership. And the only way they're going to do that is if retail investors sell. They don't want me to make videos like this. They want people like you that are watching to look at people like me like I'm crazy. You watch this video right now, right? And you tell me everything that I've been telling you. You tell me what sounds crazy. Does the data make sense? I'm showing it to you. This is a pure example of Wall Street hiding this information from retail investors. This is a pure example of how they go ahead, sell retail the bag, and then as retail holds the bag, by the time it's ready to go up based off of the fundamentals, which I showed you, retail makes a few couple of bucks, and then they sell, and then it jumps back up. I've had billionaires join our platform in the lifetime access. What we are teaching works. The data that we have works. And in the next 5 years, you guys are going to see exactly what I've been trying to tell you and warn you about. Look at the number of new positions. It exploded, but then it started dropping. And then it went up here in Q3 of 2024. It bamboozled up over the red line, showing that there's been a change in sentiment. You want to know something funny? Let's scroll down. Let's look at the put to call ratio. The put to call ratio went all the way up as high given the SPAC. We can ignore that aberration. Actually, let me see. Let me show you something. Here, this will tell you the story. Look at the total puts. It exploded back in Q2 of 2021. What is that? That was the short squeeze for Clover Health. Look at how many puts they bought. Let me show you something else that's weird, that I can't explain. This doesn't make sense. And I think that since I'm going to be disclosing this, I think Wall Street is going to patch this up, given that they know about my platform. Look at the ownership percent for AMC. Does this make sense to you? Well, before I even show you, let me show you something else. Look at Apple. Look at Apple's institutional ownership for the past 25 years. Institutional ownership doesn't go over 100%. You can't own more than 100%. The highest Apple was 70%. Let's go back and let's show another company, Tesla. Tesla, again, 73%. Institutional ownership does not go over 100%. Now, let me show you something freaky that will share with you how disgusting Wall Street is. This is AMC. Look at institutional ownership. Why does it say 365%? Why is institutional ownership high, over 100%? It has something to deal with synthetic shares. You understand what I'm saying? This is a very dirty game. And I'm trying to share with you a software that I created that leaves no stone left unturned. What else do I would like to say? That's about it. For all the people that are watching and all the people that have joined my platform and all the folks that have shared where they live, it is both impressive to see the level of folks that have believed in the mission of democratizing financial literacy to retail investors around the world. Understand, you might see these beautiful photos of ocean views, presidential suites, things that are like, there's no way I could accomplish something like this. How can I do this? And I'm telling you right now, you can. I started from they call us a white trash trailer home. I started from there. I started from nothing. And look where I am now. This was my neck of the woods. And even after this, it got even worse. I was on the street. I was homeless. I made and built my own home in an alleyway when I was a homeless teen in America. But it gave me the grit, it gave me the tenacity to go ahead and build something much greater. Something that gives you direct access to what Wall Street investors think about any ticker symbol you want. This is very powerful stuff, guys. And I'm very excited to be able to share it with all of you. Little by little, everything that I've been telling you, you'll see through time, it'll come true. But hopefully by then, you've secured the ability and the position to be able to use this knowledge to your advantage to break out of the matrix. God bless you guys. And happy Easter to all of you. Go ahead and look up a couple comments here. It's just crazy that institutions can fluctuate stocks by just them buying it. Everything is played against us retail investors. Not anymore. There's a way out. There's a way out of hell. Al, I don't think most people understand the level of the information. I don't think so either. Oh, I believe so. That's for sure. Yeah, I don't think they do. But once they see this move, they're going to realize in order for them to change their life and their circumstances, they might have to go ahead and learn. Because if someone like me can do it, someone who had to fight for every meal that I have, everything in life that I have, I had to fight for, you can do it too. God bless you all. I'll see you on the next one.